Hello, friends. Right now, without realizing it, some of you are losing retirement income every single month. Not because of inflation, not because of the market, because of 5 specific IRS and Medicare forms you have never filed. And because no one in the system has any obligation to tell you they exist, think about what that actually means. Your pension administrator may be withholding more federal tax than you legally owe, and they will keep doing it every month until you submit one specific form telling them to stop. Your Medicare premium may include a surcharge based on income you earned 2 or 3 years ago. That could be income from a job you no longer work or money you no longer have. Medicare will keep charging you for it every month until you file an appeal. If you contributed to a traditional retirement account above a certain income limit, there is another risk. The IRS may treat money you already paid tax on as if it were untaxed. That means they may tax it again and keep doing it for every withdrawal you take in retirement. None of this triggers an alert or a letter. It just happens quietly month after month. It keeps happening until someone shows you the forms that stop it. I am going to show you all 5 today. Stay through to the end because the form with the highest monthly impact is the last one I cover. Leave before we get there and you will not have the full picture. Before we go, in some quick context. This video is for adults at or approaching retirement age who receive Social Security, a pension, or retirement account income. Everything here draws from the IRS, the Social Security Administration, and the Centers for Medicare and Medicaid Services. I will name each source as we go. This is educational content only, not personalized tax, financial, or legal advice. Nothing here is a promise of any specific dollar savings. Before acting on anything here, speak with a licensed CPA enrolled agent or qualified tax professional. Make sure that person knows your specific situation. These 5 forms are free and available from the IRS and the Social Security Administration right now. One question before we start. Are you currently having any federal income tax withheld from your pension or retirement account distributions? Yes or no in the comments. Your answer tells me exactly who needs what comes first. There are 5 forms. Here's the order we go through them. Number 5 is Form W-4P, available from the IRS. This form controls how much federal income tax is withheld from your pension annuity or IRA distributions. Here's what most people do not know. When your pension program or IRA custodian first set up distributions, they applied a default withholding rate. That rate was never calculated for your specific income picture. It was a generic estimate, and that estimate may be meaningfully wrong in either direction. If it is too high, you have been sending the federal government an interest-free loan every month. You recover it as a refund every April. The refund feels good, but that money was yours all year. If the default is too low, you are quietly building a tax liability you have not planned for. Depending on how far off it is, you may face an underpayment penalty on top of the bill. According to the IRS, you have the right to change this at any time. You submit Form W-4P directly to your pension administrator or IRA custodian, not to the IRS. Your adjustment takes effect the following distribution cycle. Pause and write this down. Form W-4P submitted to your administrator, not to the IRS. Number 3 is Form W-4V, and it covers the same problem on the Social Security side. Social Security payments arrive with 0 federal tax withheld by default. For some people, that is correct. If your combined income is low enough that none of your Social Security is taxable, 0 withholding is right. But if your Social Security income is partially taxable, that 0 default can create a surprise bill every April. Sometimes an underpayment penalty is added on top. You owed the tax. Nothing was held back. No warning came. Form W-4V, available from the Social Security Administration, lets you choose your own withholding rate. According to the IRS, you have 4 options: 7, 10, 12, or 22%. Pick the rate that most closely matches what you actually owe. Submit it online through My Social Security, by mail, or in person at your local Social Security office. If you chose a higher rate years ago when your income was greater, this same form brings it back down. Write down the 4 options: 7, 10, 12, 22%. Number 1 is Form 8606. This is the one that costs people the most money over the longest time. That is because most people never see it happening. Most traditional retirement account contributions are tax deductible. You lower your taxable income when the money goes in, then pay tax when it comes out later. But if your income in certain years was above the IRS deductibility limit, some contributions were after tax. That means the money had already been taxed before it went into the account. According to IRS guidance, that after-tax amount is called your IRA basis. If it is never documented through Form 8606, the IRS has no record that part was already taxed. When you take distributions, the full amount may be treated as taxable income. That is how you can pay tax twice on money that should only be taxed once. Form 8606 is filed with your annual return for every year you made a non-deductible contribution. According to the IRS, amended returns may allow you to establish basis for past years. It is also legally required for anyone who has done or is planning a backdoor Roth conversion. Without it, a conversion that should be partially tax-free can look fully taxable on paper. Number 4 is Form 1040-SR. This is the federal tax return the IRS built specifically for taxpayers aged 65 and older. Millions of people who qualify still file the standard version every year. Sometimes their preparer defaults to it, and nobody raises the question. What matters about Form 1040-SR is the structure, not the print size. According to the IRS, it includes a dedicated section for the additional standard deduction. That additional standard deduction is available to taxpayers 65 and older. It also has a cleaner layout for Social Security, income, pension distributions, and retirement withdrawals. Those are the 3 income sources most common in retirement. Here is the action step. If you use a tax preparer, ask one specific question before you sign your next return. Ask them, are you filing my return on Form 1040-SR? Drop a yes or no in the comments. I want to know how common this gap actually is. If your preparer says no, ask why. If they cannot give you a specific reason for using the standard form, instead that conversation is worth having. If you file using software, look for the senior return option before submitting. Most programs support it, but you may need to confirm your age to trigger the correct routing. Here is an illustrative composite, not a single verified individual. It shows the kind of situation the next form was built to address according to the Social Security Administration. James is 67, Ruth is 65. They both retired in the summer of 2024 after working in Tennessee. For the first half of that year, both were still working. James also wrapped up a consulting contract before leaving his position. Their combined income for 2024 was much higher than what they earn now. When their Medicare premium notices arrived for 2026, both showed surcharge amounts. Those surcharges were on top of the standard Part B rate, and they were based entirely on that elevated 2024 income. Their actual retirement income is now Social Security for both and a modest pension for Ruth. That is only a fraction of what Medicare used to set those charges. Neither of them knew an appeal form existed. They assumed the surcharge was fixed and paid it month after month. After learning about Form SSA, 4 both filed appeals, citing retirement as the qualifying event. They documented their current income, and both were approved. Their premiums dropped to the standard rate. Every month before they filed was a month they paid more than they had to. Number 2. This is what I told you we would get to. Form SSA 4. IRMAA stands for Income-Related Monthly Adjustment Amount. According to CMS, it is an additional charge on your Medicare Part B premium. It is based on your income from 2 years prior, not your income today. For anyone who retired recently, that 2-year-old figure may be far higher than what they earn now. The same problem can happen after a large retirement distribution or any one-time income event. Medicare keeps charging the surcharge on that old income until you tell them it has changed. The Social Security Administration built Form SSA 4 for exactly this situation. It is a life-changing event appeal. The message is simple. The income year you are using no longer reflects my situation. There are 8 qualifying events. Pause and write these down. Marriage, divorce or annulment, death of a spouse, and work stoppage, meaning retirement. Reduction in work hours, or income loss of income-producing property and loss of pension income. The 8th is receipt of an employer settlement that inflated a prior year's income. Any one of those events qualifies you to file. Form SSA 4 is available from the official Social Security website. Submitted online through My Social Security by mail or in person. According to SSA, corrections typically take effect within 1 to 2 billing cycles. There is no arbitrary mid-year deadline, but every month you wait while paying a surcharge you may not owe is a month you cannot recover. 5 Form W-4P adjusts withholding from pension and IRA distributions. It is submitted to your administrator, not to the IRS. 3 Form W-4V adjusts Social Security withholding. It has 4 rate options and is submitted to the Social Security Administration. 1 Form 8,606 documents non-deductible IRA contributions to prevent double taxation. It is filed with your annual tax return. 4 Form 1040. SR is the tax return designed for taxpayers 65 and older. It is worth confirming your preparer is using it. 2 Form SSA. 4.4 is the IRMAA appeal available from the Social Security Administration. It is open to anyone with a qualifying life-changing event since the income year Medicare is using. 3. Look at your current withholding settings on your pension, retirement account, and Social Security. Ask whether those settings still reflect your actual income. 2. Ask your tax preparer whether your return is filed on Form 1040 SR. Also, ask whether your IRA history includes non-deductible contributions that require Form 8,606. 1. If you are paying a Medicare surcharge and a qualifying event applies, consult a licensed professional. Ask whether filing Form SSA 4.4 is the right move for your situation. If you have a parent, sibling, or close friend who retired in the last 2 or 3 years, share this today. That matters especially if they have never heard of Form SSA 4.4. Every month they do not know this appeal exists is a month they may be overpaying. Leave us a comment which of these 5 forms was completely new to you today. The next video covers how to calculate the right withholding amount for your specific retirement income mix. It explains the exact numbers to put on Form W-4P and Form W-4V. See you there.